Hello, good evening, and welcome to today's session for the taxation series that has been going on with EY Pakistan. Today we have Farhan again for the tax computations that has been almost covered. Today would be the last session for the tax computations, and then we will be moving on to the next segment of these webinars. Uh, Sorry for the technical glitch that we were having. We are starting a bit late, so I won't take much time and hand it over to Farhan. Farhan, you can take the mic now.
Thank you, Feroz, for the introduction, and good evening, everybody. I hope you're having a good start of the week because Monday is never a good day to start, at least in the office space. So, as I think by now most of you would recognize my voice, I'm Mohammed Farhan. I've been part of EY for the past 3 years. And I will be presenter slash trainer for today's topic once again. So I think without any delay, we can start because we are already 15 minutes past our scheduled time. So as Feroz mentioned, that today is the 5th session, and today is also the last session for the tax competition part. And up till now, in the past 3 sessions, we have already covered we only covered the income tax part. But since income tax part was a major part, and that's why we took 3 sessions, and we have pretty much covered normal tax regime as well as the final tax regime and different withholding and collection of advanced tax regimes that are currently applicable. So for today's session, we are our focus is going to be on three areas, three major laws, which are the sales tax law, different sales tax law, and then we will quickly sort of run through the two more lesser, I would say lesser major laws, custom duty and the federal excise duty. For sales tax, you would already be familiar that there are two kinds of sales tax laws, one governing the sales tax on goods, and the other obviously sales tax on services. Those of you who joined in our first session can recall that under the constitutional structure of Pakistan, the sales tax on services falls exclusively within the jurisdiction of the provincial legislature, barring Islamabad Capital Territory, because that's only that falls within the exclusive jurisdiction of the federal legislature, whereas sales tax on goods exclusively falls within the purview of the federal legislature. So what exactly that means is that across Pakistan, federal legislature, the law that federal legislature has enacted in respect of the sales tax on goods would be applicable across Pakistan, whereas sales tax on services, the laws enacted by each provincial legislature would be applicable with respect to the territorial jurisdiction of that particular province. For instance, if Punjab Assembly has passed law, then that would be restricted to the extent of the territorial jurisdiction of the province of Punjab. For those of you who might not be familiar with Pakistan that much, there are 4 provinces in Pakistan: Sindh, Punjab, Khyber Pakhtunkhwa, and Balochistan. Whereas the Federal Capital Territory, Islamabad, falls exclusively within the jurisdiction of federal government. We also discussed in the first session different laws that govern these different applicable sales taxes. For sales tax on goods, the governing law is Sales Tax Act 1990, whereas for sales tax on services, governing laws, each provincial jurisdiction has its own sales tax on services law. For Sindh, it's Sindh Sales Tax on Services Act 2011. That was the first provincial legislature to enact the Sales Tax on Services Act after the 18th Amendment in 18th Amendment to the Constitution of Pakistan in 2010. And then second provincial legislature was Punjab. Subsequently, Khyber Pakhtunkhwa and Balochistan legislatures, they respectively enacted their in provincial legislations governing sales tax on services. Uh, we will cover both areas, sales tax on goods as well as sales tax on services in details. Sales tax on goods, sales. So we are going to start with the chargeability of the sales tax on goods. So sales tax is basically charged on the value of the taxable supplies by a registered person in extension or furtherance of the taxable activity carried on by that particular person. Or sales tax would be charged on the goods imported in Pakistan, irrespective of their final territories in Pakistan. We will cover that part as well. So first, we will come to this taxable supplies. What does taxable supplies mean? So this taxable supplies basically mean supply of taxable goods, right? And taxable goods mean that any good which has not been exempted under the Sales Tax Act 1990 would be considered as taxable goods. It's very important to remember this, because once we come to the sales tax and services, we would come to know how this particular definition of taxable goods is different from how the taxable services have been defined under the respective sales tax on services legislations, right? So taxable supplies of taxable goods, and taxable goods, any good which is not exempted. Of course, there are certain exemptions such as actionable claims, shares, or goods of these sorts. They will not be considered as goods within the meaning of taxable goods. Registered person. Registered person basically means that anybody under the section 14 of the Sales Tax Act, there are different persons prescribed who are required to be registered, and a registered person would also include anybody who is not just required to be registered under the section 14 of the Sales Tax Act, but also who is making taxable supplies of the goods. And there are certain cases where not necessarily a person may fall within the prescribed persons or businesses who are required to register with the Federal Board of Revenue. For instance, if somebody is making imports, not necessarily that they may fall within the prescribed personnel, but they may seek registration with the tax authorities for the purpose of making imports into Pakistan. Another important concept that you can see underlined on your screen is the taxable activity. So taxable activity is basically the economic activity that's carried by a person, that can be in the form of either trade or some sort of commerce activity, or rendering of services by a person. That would also fall within the definition of taxable activity. But obviously, this particular definition would not include activities that may be rendered by an individual in the course of his employment, because as by now you would all be familiar that the employment would not be at all considered as some sort of a business activity. Rather, that would be considered as a separate from business activity, and has particularly been defined as employment, and employee-employer relationship is governed differently. Now, on the other hand, goods imported in Pakistan, any taxable good that's imported into Pakistan will be subject to sales tax at the time of import of goods. And generally the collector of customs at the time of clearance is uh, uh, generally is sort of empowered with authority to collect the sales tax under the Sales Tax Act. Another important part to remember is that it's irrespective of the final territories in Pakistan, because sometimes the goods may be imported through the ports of Pakistan. For instance, if goods are imported in through Karachi port, and they are bound, let's say, to Azad Jammu and Kashmir, which is totally an politically and legally an independent territory of Pakistan. So if goods are imported through Karachi, but they are bound to a territory outside of Pakistan, then those goods would still be subject to sales tax under the Sales Tax Act 1990. Now, there are different rates that you would come across under the Sales Tax Act. However, the general rate of sales tax under the Sales Tax Act is 17%. And in case the goods are supplied to persons who have not obtained sales tax registration, would also be subject to 3%. Now, obviously, not everybody would be required to obtain sales tax registration. So it does not mean that they would automatically or by default be subject to this further tax, and effectively making it 20% general rate instead of 17%. Rather, the focus here is on the persons who are required to seek registration with the tax authorities under the Sales Tax Act, but they haven't obtained their sales tax registration. Therefore, to disincentivize their actions, the legislature has promulgated this further or additional tax of 3%, so that if they are not compliant with the tax with the legal requirements, they would have to bear an additional cost, which may or may not be considered as a deterrence uh, towards their non-compliance of the Sales Tax Act 1990. Now, there are different schedules that have been prescribed, and there are different rates or different mechanisms that have been prescribed under those schedules. The first schedule that you can see on your screen is the 10th schedule. So 10th schedule basically prescribe fixed rates, and those are very limited, or I would say rather two or three industries where they have prescribed these fixed rates. For instance, so on brick manufacturer, or the cement or concrete blocks manufacturer, so they have these fixed rates that have been prescribed. For bricks manufacturer, I think the rates are fixed on monthly basis, whereas for concrete or cement cement block manufacturers, the rates are fixed on per square feet basis. Similarly, in the third schedule basically is the schedule where the general rate would still be applicable. However, the general rate would be applied on the retail price. Now, it wouldn't be on the basis of any particular value that can be changed from one stage to another. Rather, the retail price would be set by the manufacturer of the goods, and those retail price are required to be printed on those particular goods that have been mentioned in the third schedule. And accordingly, sales tax would also be required to be printed on those on the packaging of those goods. I'm sure anybody in Pakistan who has purchased juices or different I think lavatory related products, you would come across that the retail price along with the sales tax is printed on those products. Similarly, reduced rates have also been prescribed for goods in 8th schedule. However, these rates are prescribed are applicable subject to the conditions that may be mentioned in the aid schedule. So there is a long list of goods that have been mentioned in the aid schedule. However, the reduced rate would only be applicable as long as the particular conditions that have been prescribed thereof are met by the supplier of the goods. In ninth schedule, though it has been discontinued, however, it has only one sort of element included, or one particular product included, which was related to mobile phones and different sales tax applicable on depending upon the kind of product of mobile phones that were either manufactured or imported in Pakistan. So these are different schedules that have been prescribed under the Sales Tax Act, and depending on the schedule, the rates can vary from product to product. Now, it's also very important that who under the law, who is liable to pay the sales tax. Before I discuss who is liable to pay, it's also important to remember that there will be implications vis-a-vis the recipient of goods. However, the primary liability still falls on the persons who have been prescribed or who have been required to be to make the payment of the sales tax, or to charge, collect, and pay the applicable sales tax. Under Section 3, any person who is making the supply of taxable goods would be liable to charge, collect, and pay the sales tax to the Federal Board of Revenue. Similarly, in case of import of goods, the person who would be importing goods would be liable to make payment of the sales tax at the time of import of goods. As I mentioned earlier, the collector of customs is empowered with authority to collect the sales tax at the time of import. So this liability is pretty much by default discharged whenever the clearance of goods is completed at the port of entrance. Now, on the other hand, obviously, as I mentioned in the last session, that the tax authorities have come up with creativities where they not just rely on one person to sort of discharge their tax liability, they also try to make other people responsible in this chain to collect and pay the sales tax to the sales tax authorities or to the Federal Board of Revenue. And of course, that creative way is this withholding that can be in the form of withholding of income tax, and in this particular case, it's in the form of withholding of sales tax. Now, under the Sales Tax Act 1990, 11th schedule is the particular schedule that deals with the withholding requirements, and there are a number of withholding agents that have been prescribed. As you can see on your screen, that on the left column, you can see the different withholding agents who have been prescribed. And in the middle column, you can see the supplier category. That basically means the person from whom the sales tax would be withheld by the withholding agent. And obviously, on the rightmost column, the third column, you can see the rate or the extent of reduction that have been prescribed. Now, to take one example, so if a company is receiving taxable goods from an active taxpayer or active supplier of goods, then that company would be required to deduct 1/5 or the 20% of the sales tax as shown on the invoice. Right? So, and similarly, you can see different withholding agents being required to withhold sales tax in different situations, in different circumstances. Active taxpayer, same as the active taxpayer under the income tax ordinance. Active taxpayer is the Federal Board of Revenue issues this list of active taxpayers on its website. So anybody who is active taxpayer would fall in that list of taxpayers. If somebody does not fall in that list of taxpayers, that would not be considered as active taxpayer. Obviously, if the person is not active taxpayer, you can see that the company would be required to withhold 5% of the gross value of supply. That means basically, if somebody who is not active taxpayer and is issuing an invoice against the supply of taxable goods, and that supply is made to a corporate entity, then that corporate entity would be required to withhold sales tax at the rate of 5% of the gross value of those supplies. So obviously, active taxpayer and a supplier who is not an active taxpayer both have their implications vis-a-vis the withholding. Now, uh, since I talked about how there are different rates under Section 3, and different schedules have been prescribed, which lay out different sales tax rate, as mentioned thereof, there are goods who have been exempted specifically, and those are the goods mentioned in the sixth schedule. So there are in the sixth schedule, there are four tables. One table deals with the import of goods. The other table deals with the goods who are exempted only on their local supply, and third table includes goods who are exempted not just on the imports but also on the local supply of those goods. And table 4 has been very recently included under the Finance Supplementary Act. If I'm not wrong, I think it was under the Finance Supplementary Act that was introduced and passed in the month of January, starting this year. And that table deals with the supply of goods within the territory that have been agreed with Iran, Afghanistan, and Pakistan. Similarly, there's a concept of zero rating as well. Now, zero rating essentially means that the tax supplies would be made at the rate of 0%. And why that is the case, we will come to that shortly, because that's certainly the question that's going to come to a lot of your mind. So basically, goods who have been specified in the fifth schedule, or the goods who are exported, are the main categories of goods which are subject to sales tax at the 0%. In simple terms, we call it zero rating. And the reason for that is that when a good is being exempted from the sales tax, there is no adjustment of input allowed against those goods. Whereas where goods are subject to zero rating, and we will come to know that shortly as well, the goods which are subject to zero rating are the input tax adjustment is allowed against those goods. So what that essentially means is that, for instance, in the case of goods who are exported from Pakistan to outside of Pakistan, they are subject to zero rating. However, any input tax that's been paid in making the supply of those zero rating goods will be allowed a refund against those inputs, subject to, of course, certain limitations and conditions. Now, on the other hand, if exempted goods are supplied, then any input tax that's been paid on purchases in making making supply of those exempted goods, the input would not be allowed simply meaning that there would not be any sort of a refund in to the extent of those exempted supply of those exempted goods. So that's why it's very important why the sales tax act have prescribed these different sort of mechanism, whereas in essence both are can be considered as either zero rated goods or exempted goods. Now, obviously, uh, this is a very important part of this Sales Tax Act, as well as today's session. Because in Pakistan, the sales tax is basically applied in the value addition mode, whereby any person who is making supply of goods is allowed adjustment in respect of sales tax paid on the purchases which have been used in making supply of those taxable goods. As you can see on your screen, whenever a person is required to compute the tax liability, so basically that person is required to compute its output tax liability, and then from that output tax liability, the input tax, in accordance with the provisions of the Sales Tax Act, input tax will be deducted from that, and then whatever will be the residual amount would be obviously that would become the tax liability. For instance, if somebody who has a output tax liability of 1 million rupees, and he has paid one 0.5 million and 500,000 rupees as input tax, then subject to conditions, obviously they will be allowed input tax adjustment of that 500,000 rupees that they have paid in terms of the input taxes. Now, as you must be getting irritated that I keep saying that subject to conditions, subject to limitations. So obviously that's very important to keep that in mind, because not every input tax would be allowed. There are very strict conditions, and tax authorities obviously are very vigilant on that as well. That they want to make sure that the certain conditions are fulfilled before any taxpayer is entitled or is claiming the input tax adjustment. And the first condition that you can see on your screen is that the person who is claiming the input tax adjustment in respect of the purchases must hold a tax invoice in his or her name and bearing his or her registration number in respect of such supply. Now, these are very strict conditions, right? You can see if the invoice is not in the name of the entity who is claiming the input tax adjustment, or there's no sort of registration number mentioned on that is something can become a reason for tax authorities to disallow this input tax adjustment. Similarly, in case of the goods, in case of the purchases or the goods that have been imported into Pakistan, person claiming the input tax adjustment is required to hold bill of entry or goods declaration in that person's name. Again, that particular bill of entry or goods declaration would also be required to include sales tax registration number on the face of that particular document. So in case that's not the condition, then obviously tax authorities would not allow the claiming of this input tax adjustment. Also, it's very important the way now tax authorities have sort of prescribed these electronic sales tax return filing methods. So most of the times it has become very difficult. In case these conditions are not fulfilled, the tax authorities or the system by default would not allow inclusion of these invoices which do not meet the criteria. So similarly, there are other conditions as well on the adjustment of input. For instance, goods that are subject to extra sales tax. So as you can remember from the previous slide, there was a extra sales tax at the rate of 3% in case of supplies made to persons who are not registered or who have not obtained their registration. So that 3% or that extra sales tax would not be allowed as input tax adjustment. Similarly, the goods or services which are being used for purposes other than the taxable supplies would also be not available for the input tax adjustment. Again, fake invoices would be another reason for tax authorities uh, to not allow the input tax adjustment. And similarly, there are other conditions as well. Uh, Goods and services acquired for personal or non-business consumption would also be not available for input tax adjustment. As I mentioned earlier, the sales section 14 of the sales tax Act 1990 has prescribed these different persons who are required to get themselves registered with the Federal Board of Revenue. And some of the examples that you can see are the manufacturer, of course, barring any manufacturer who is running a cottage industry. So meaning thereby that somebody who is running a cottage industry would not be required to get himself registered with the Federal Board of Revenue for the purposes of Sales Tax Act 1990. Similarly, a retailer, a wholesaler, dealer, or distributor would be required to get themselves registered with the tax authorities for the purpose of Sales Tax Act 1990, as well as making taxable supplies thereunder. The other conditions, as you can see, are any exporter who intends to obtain sales tax refund against the zero-rated supplies would also have to obtain registration with the tax authorities. If the exporter hasn't obtained the sales tax registration, as you can see the consequence that they would not be able to claim any refund that may arise on account of any input tax incurred in respect of the purchases used in making the taxable supplies or the taxable exports subject to zero rating. Now, there's also a concept of temporary registration. So I've also mentioned this earlier, that the temporary registration is something that only used in cases where the person who is who needs to get himself registered with the sales tax. However, there is no compulsion on that person to get himself or herself registered with the sales tax authorities. For instance, if somebody for personal use is trying to import some goods, then obviously he may not fall under the category and under these above mentioned categories, but for the purpose of importing goods, he may have to seek registration with the sales tax authorities so that he can import goods into Pakistan. Otherwise, this is probably one of the mostly used instance for this temporary registration requirement. Now, so the last part is filing of return. So every registered person is required to file tax return, sales tax return for the tax period. Now, tax period, basically, the way it has been defined, it's 1 month period. For instance, in case of March, it would be period starting from 1st of March till the last day of the March, the 31st of March. So every registered person would be required to file its sales tax return on monthly basis. I think in simple terms, we can say that they are required to file their sales tax returns on monthly basis. Obviously, the tax authorities have prescribed form of sales tax returns, which include different annexure. Primary annexures are annexure A and annexure C. Annexure A is mainly the annexure including purchases of that registered person in this and annexure C is the sales or the domestic sales made by a registered person. Similarly, there are certain sectors that can be required to file quarterly returns in addition to monthly returns. Uh, I can recall one of our client who is involved in the manufacturing sector has been required by the tax authorities to file the quarterly returns as well, in addition to the monthly returns. Similarly, there are cases in which the annual sales tax returns have also been prescribed, where the tax authorities may require different sectors to file their, in addition to monthly or quarterly returns, the annual returns as well. Um, so the idea would be to basically reconcile any sales made by that person in the reconcile the sales shown in the audited accounts with the sales shown in the annual sales tax return. The last part of this particular topic is the deadlines for sales tax payment and filing of sales tax returns. So every registered person is required to file sales tax return by the 18th of the month following the tax period to which the sales tax return would relate. For instance, if the tax period for which the sales tax return is required to be submitted is March 2020, then the deadline for filing of the sales tax return for March 2020 would be 18th of April 2022. Now, similarly, for the payment of sales tax return, the deadline is the 15th of month following the tax period to which the sales tax payment relates. Again, using the same example, if the sales tax payment relates to the tax period of March 2020, 22, then the payment would require to be made by the 15th of the April 2022. Uh, uh, if you can see on your screen, I've written I think if there's any confusion vis-a-vis the deadlines for payment of sales tax and filing of returns, to shoot your questions to me. I will respond to those questions. Just one last bit, and then we will take a prayer break, and then we will come to the questions that you may have up to the point that we have covered so far. Of course, these are not strict deadlines. These can be extended by the tax authorities. Those of you who regularly deal with these scenarios would come across notification from the tax authorities that they have extended the deadline by so and so days, and the deadline of filing of return by so and so days. So these deadlines can be extended. However, there has to be some sort of a notification by the tax authorities. Otherwise, there will be obviously different penalties as well as default surcharge on the late payment. So I think we are good for the sales tax on goods, and we will move on to sales tax on services part after the prayer break. We can pause for 10 minutes. We will rejoin at 7:05, and then we will proceed to take your questions. And then obviously we will move on after the question. We will move on with our today's session. Hello, everybody. Welcome back. I hope everybody is back. I can see there are 150 attendees. I'm not sure how much are present online, but I think we can just wait for 1 minute because we are already have short time for today's session. So let's just wait for 1 more minute and then we can resume. We will take your questions and then we will move on.
You guys can write up your questions if you have any until we resume the session.
Feroz, I do not, I think, have access to the question dialog box. Can you kindly allow me to access that?
Sure, I'm just doing it right now.
All right, thank you.
Farhan, can you check now?
All right, I see Hassan Shabir has been responding to a lot of questions. So I think I forgot to introduce Hassan. Hassan Shabir is a dear colleague of mine at EY. He's been part of EY, I think, for the last 4 to 5 years. His major area of expertise is focused on the sales tax, not just the compliance side, but also the contentious side of the sales tax, regularly appearing before the tax authorities. So that's why he's been very gracious with his time, and he's been responding on the questions. So I think we can take some of the questions if Hassan hasn't responded already. So somebody any sales tax on services in GB and AJK. In GB, I think there, to the best of my knowledge, there isn't any law at the moment applicable for sales tax on services. But for AJK, though it's yes, it's a separate entity, it's a separate legal territory, but it has its own sales tax on services law. Which I believe the legislature has promulgated there. So there is a law applicable in AJK with respect to sales tax on services. So what is cottage industry? Wasif Islam had asked, and Hassan Shabi has already responded. Thank you, Hassan. I am just going through the questions and trying to figure out which questions have been left unaddressed. So Burhanuddin has asked this question. SRO exempted the whole region of Pata for all type of taxes. So when taxable goods are purchased by retailers from local distributors, does the supply made to such retailer is subject to 3%, and also does the distributor adjust uh, input tax against such supply made to unregistered person, as the law disallowed such adjustment in the case of supply to unregistered person. So first, there are two parts of your question. The first part relates to the extra tax or the further tax. So basically the further tax is applicable in case the supplies are made to person who has not obtained the sales tax registration number. I think the case would be very simple. If somebody who is required to register with the tax authority, with the Federal Board of Revenue, and they haven't obtained the sales tax registration number, the case would be very simple for this 3% further tax. Now, again, this sounds very simple, but one would have to evaluate whether the person is required to obtain sales tax registration or not. In this case, it appears that the person may not be required to register, but then obviously that will have to be evaluated on case-to-case basis. Another second part of your question deals with does the distributor adjust input tax against such supply made to unregistered person, as the law disallowed adjustment in case of supply to unregistered person? I think your answer is probably simpler than the answer to the first part, that this would probably be not allowed because the supply to unregistered persons would not be uh, 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 there would be no input tax adjustment against that supply. I hope that would answer your question, Burhan. So Ali, either you have asked a question. Uh, I'm. I think there's a bit of ambiguity with regards to what exactly you are trying to ask. I would request you if you can kindly clarify uh, uh, this question. I would be happy to respond. Alina Seher has asked how zero-rated and exempted goods differ in respect of sales tax. Alina, I think if you go through the recording of today's session, you would find that I've already responded to this question, because I knew that this question was going to come. So you can refer to the recordings for today's session. If no, it's still not clear, I will be happy to glad in the next session to respond to your question in the next session. So Ali Heather, I'm gonna unmute you because you obviously have made your question. You have made yourself available. Let me unmute you. and then I will 10 days. Let me find Ali Heather. Not sure.
Assalamu alaikum.
Welcome.
How are you, sir?
I'm fine. Thank you. Thank you.
Sir, I wanted to ask that there was a law that cloth merchants were allowed 0.5% tax, sales tax on seller selling to a filed wholesaler and 1% tax on selling to a non-filer. I'm trying to ask, does that law still apply right now to those cloth merchants, or those cloth merchants should opt in for the 17% sales tax?
Is that the only question you have, Ali Heather?
Yes.
So, to be honest, this is a very specific question, and I think from my experience, I can tell you that it's been quite long that I uh, uh, some worked on such a query. But I would be glad to get back to you on this question in hopefully in the next
Actually,
session.
the problem is that I own a business, a cloth business, and I do some consultancy to friends and family as well on such questions. Because these types of questions come to me daily, but
I could sense it.
I
I
know
could
for a
sense.
fact that this was the case till I think last year, that the law was 0.5% and 1% respectively. So I just wanted to know that if that's the case, if that's still standing or not.
I could sense that how deeply you must be involved because your question was very specific. So
Uh,
I would be happy to get back to you on this, hopefully in the next session. Thank you.
okay. So thank you.
So I think in the interest of time, we can resume and then we will get back to further questions in the next question answer break. So second part of the second type of sales tax is sales tax on services. Excuse me. So by now, you must have memorized that the sales tax on services is a provincial sales tax under the constitutional structure. Now, just like sales tax on goods, sales tax on services is also an indirect tax, or rather, indirect tax in sense that it's ultimately passed on to the consumer or the ultimate consumer of those services. And similarly, similar to the sales tax on goods, sales tax on services is also applied in the value addition mode, meaning thereby that there will be input tax, there will be output tax, and the registered person or the person making taxable supply of taxable services would be entitled to claim input tax adjustment, not forgetting subject to certain conditions and limitations, which we will shortly go through as well. So, so what I've done for today's slides is that I've tried to discuss general concept of this chargeability of sales tax on services, not a particular law. Uh, I've tried to generalize the definitions and discuss those concepts, but at the same time, what I've done is that I've included the reference to the relevant sections that you can obviously refer to. And if you have any question vis-a-vis the particular sections in the respective laws, that obviously I would be glad to respond either today or in the next session if you have any question. All right. So taxable services. All right. So one thing before I come to the chargeability, as you can recall, I mentioned earlier that the sales tax on goods have this very specific definition of taxable goods, where it says that the goods, all goods except for those goods which have been exempted, would be considered as taxable goods. Now, on the other hand, for taxable services, there is a specific schedule, almost in each of the, not almost, rather in every law, there is a specific schedule that includes this list of taxable services, and any service which does not fall in that schedule of the taxable services would be considered as not taxable service. Right. So keeping that in mind, if any person who is providing those services which have been mentioned in those respective schedules, uh, from his office or place of business in the course of the taxable or the economic activity, including the commencement or termination of the activity, would be subject to chargeable to sales tax on service under the respective legislation. Now, I've highlighted a couple of important concepts for you to remember in case of charging of the sales tax on services. So taxable service would be first thing that I mentioned, that it's a service that's been mentioned in the normally the second schedule of these provincial laws. It's provided by a person from his office or place of business. So the place of business, that person must have an office or place of business in that province, and that provision of service must be in the course or furtherance of the taxable uh, economic activity, or the taxable activity. And this will include, the economic activity will include the commencement or termination of the tax activity. All right, so I think if I have let me repeat myself to make things simple for you so that you can understand what I'm trying to say. That office or place of business must be in that province, and such a provision of service must be in the course of or the furtherance of an economic activity. And that economic activity will include whether the services are commencing or terminating within the territorial boundaries of that particular province. Place of business has been defined under respective laws, and they, you would see that they pretty much include a very general definition of place of business. So that can be something, a place that has been rented, uh, or shared, or in any manners whatsoever, occupied by that person within the territorial jurisdiction of that province, or that economic activity is carried wholly or partly in that province, either through any other person. uh, that basically means that you do not have to be present in that particular jurisdiction. If you are doing so through a person, that can be an agent of that person, that can be an associate or a franchise or some sort of a branch office, or extension of that office, would also be considered as place of business within the meaning of the sales tax on services and the chargeability thereof. Similarly, economic activity, just like the taxable activity we went through, we went through under the Sales Tax Act, has also been defined under the respective provincial laws. And the way the general sort of meaning of the economic activity means that the activity continuously or regularly or otherwise being carried out, or is intended to involve the provision of services to any other person, and would include any activity carried on in the form of a business, including a profession or trade or undertaking of any kind, or the supply of movable or immovable property by way of lease, license, or such similar arrangement, or a one-time transaction or concern in the nature of a business or trade. So all these different activities that have been defined, they would be included within the meaning of the economic activity. And if somebody is providing taxable services in the furtherance of these economic activities, would be considered to have been providing taxable services chargeable to sales tax on services within that particular uh, jurisdiction. Of course, there are certain exceptions to this definition of economic activity, such as the activities of an employee who is providing services would not be considered as providing taxable services, right? That's something that you would see across the board, that it's not considered as something of a business nature. Now, I've included the relevant sections that you can refer to for the purpose of each individual legislation that have been enacted in the respective provinces. Similarly, there are reduced rates, there are certain exemptions, as well as there is a general rate under each provincial legislation governing the sales tax on services. As you can see on your screen, since sales tax, uh, the general rate for that is 13%. For Punjab, general rate is 16%, and for Khyber Pakhtunkhwa and Balochistan, the general rate is 15%. Another thing that you can see is constant across the four jurisdictions is the sales tax on telecommunication services, that is 19.5%. Obviously, each tax authorities in these jurisdictions, they have from time to time, through different notifications, through different enactments, introduced reduced laws for different reasons. That can be to give a boost to a specific industry, or realizing that if the particular industry is not compliant with the general rate, to ease things for those industries, reduced rates have also been introduced. One prominent example is the restaurant services, where initially the 16% in Punjab, the rate of 16% was applicable on the restaurant services. However, keeping facts or ground facts in mind, the tax authorities introduced this 5% rate without any input tax adjustment. However, some of the business entities did approach the tax authorities, and they were able to get the 16% back on track. But obviously, those who haven't applied to the Punjab Revenue Authority for this general rate, they are still subject to 5% reduced rate. But obviously, that comes with the implication that no input tax adjustment would be allowed against such a reduced rate. Now, again, like sales tax on goods supply, the liability to pay the sales tax on services primarily lies with the person who is providing or rendering those taxable services, right? That person would be required to charge, collect, and pay the sales tax on services. However, there are obviously uh, uh, mechanisms that the tax authorities have devised to make sure that the maximum amount of tax revenue is collected, both from the registered as well as non-registered sector. So to achieve that, they have also introduced the withholding of sales tax on services as well. For you, as you can see on your screen, I have included the respective rules and regulations that the tax authorities in each provincial jurisdiction have introduced over the time. to maximize their revenue collection. So coming back to the liability to pay, one important thing to remember is that as you can recall that on the import of goods, the person importing the goods is required to bear the sales tax, or required to pay the sales tax on the goods. Now, in the case of services which are received from a non-resident person based outside of Pakistan, in such a case, the person who is receiving these taxable services would be liable to pay the sales tax on services to the tax authorities. And that is generally called under a reverse charge mode or reverse charge mechanism, where un, as opposed to a general principle, the person who is receiving the taxable services would be liable to pay this or discharge the sales tax liability with the tax authorities. Again, you can see on your screen the relevant provisions of each law, each jurisdiction, that you can, for your ease, refer to in case you want to get into each particular jurisdiction. Uh, Again, as I mentioned at the beginning of this part, that sales tax on services is applied in the value addition mode. There would be output, there would be input, and that input would be adjusted against that output, but obviously with certain conditions and limitations. On your screen, you can see some of the limitations that I have included. For instance, the very first and the foremost limitation is that when a person is claiming input tax adjustment in respect of any goods or services used in rendering or providing of taxable services, such goods all taxable services must be exclusively used in connection with the provision of those taxable services. So if somebody is not using exclusively those services or the taxable goods for the provision of taxable services, then obviously it would be required to apportion those taxable services or goods purchased in a manner that the input tax would be allocated proportionately to both taxable services as well as non-taxable services. Again, the input tax adjustment would only be available to person holding a true and valid tax invoice, and such an invoice should not be older than the 6 tax periods. Again, the tax period, for simplicity, it's the month. So if somebody wants to claim the input tax adjustment, then the invoice should be accurate, true to the facts, and it must be a valid tax invoice, and shouldn't be older than the 6 months. If that's not the case, then obviously tax authorities would not allow the input tax adjustment to that extent. There are other conditions you can see on your screen. One condition that you would see at the bottom of the screen is the vehicles, including 3 and 2 wheelers. So the section, I think, if I take example of Punjab Sales Tax on Services Act, so this has been specifically excluded from the claiming of input tax adjustment. However, there can be one argument. I mean, if somebody who is using for whom these vehicles are being used as inventory, or they are part of they are very crucial in providing those taxable services, then the argument can be made that since they are being used exclusively for the purposes of taxable services, So the input tax adjustment must be allowed in that aspect. However, obviously this would be a contention that one can take with the tax authorities. Similarly, there are other conditions you can see on your screen that apply when it comes to input tax adjustment under the provincial laws governing the sales tax on services. One condition that you can see, if on the bottom of the screen, if a tax paid to the federal government or any other provincial government for supply of goods or provision of services, if in any input is not allowed in respect of those services or goods, then this no input would be allowed thereof. For instance, if somebody is receiving services which are subject to, if somebody is receiving services in Punjab and they're filing their sales tax return in Punjab and they're claiming their input tax in Punjab, and those services are that have been acquired as being subject to same sales tax, let's say at the reduced rate, right? So you will see that the any services which are subject to the reduced rate, they are not allowed, any input is not allowed in paid on those reduced rate services. So if the sin sales tax does not allow those inputs, then obviously under this particular condition, Punjab law would also not allow the input tax paid on those services that are subject to reduced rate. Again, I've included the relevant provisions for your reference. Obviously, what I've discussed is the general concept, general idea, but for specific each specific jurisdiction, you can refer to the sections that I've mentioned in these slides. Again, a person who is providing taxable services would also be required to obtain registration with the sales tax authorities if they are not if they are not sort of compliant with these registration requirements. Obviously, tax authorities can compulsorily register those persons who are required to obtain sales tax registration and levy sales tax on those taxable services. Uh, just like taxable, just like voluntary registration under the Sales Tax Act 1990, I think all the provincial legislations also have these sort of uh, beneficiaries or making things easier for the business sector, where if they want to avail some benefit, they can obtain voluntary registration with the sales tax authorities. Just like Sales Tax Act 1990, the provincial legislation also prescribe filing of sales tax return on the monthly basis. And obviously, when filing the sales tax return, you are required to account for your input taxes, your purchases, your sales, any tax that has been withheld, and after accounting for these different areas, the person would be required to compute the sales tax liability and would be required to make the payment by the 18th of the following month to the tax period to which the payment would relate. Again, taking the same example, if the tax period is March 22, the sales tax payment related to March 22 would be required by 15th of April 22, whereas the sales tax return on sales tax on services return would be required to be filed with this with the respective provincial authorities by 18th of April 22. I think those of you who are regularly dealing with the Pakistani sales tax, Pakistani sales tax, and these different jurisdictions, you must have come across this national sales tax return. Obviously, that's a great achievement in terms of creating harmony between these different laws applicable across Pakistan, because the compliance cost is certainly too much when it comes to a business that has presence all across Pakistan and being subject to each jurisdiction separately. However, that project is not currently fully effective as of yet. Obviously, tax authorities are still in the process of negotiate negotiating, and they hopefully will come up with something concrete that would provide ease to the business sector in the country. Before moving to custom duty and federal excise duty, we can pause for the question answer, and if people have question, I can see people have raised their hands as well. Um, so if I see Hassan has been responding to a lot of questions. Thank you, Hassan, for your gracious time. It's great to have you.
You're very welcome, Rahan.
So let me go through the questions that are still unaddressed, and then we can take those questions. And if somebody so Burhan, I think you are still referring to that sales tax uh, SRO that the Federal Board of Revenue had issued vis-a-vis the erstwhile tribal regions that have now been merged with the provincial KPK and Balochistan. So in respect of your in context of your specific question, that whether a person resident of that exempted area receiving taxable goods will bear 3% or not, in the context of specified SRO issued by FPR for exemption, again the question would have to be evaluated on the case-to-case basis. So if the tax authorities have still, the tax authorities may have issued exemption that they will not be subject to these taxes. Now that these of tribal areas have now become part of the part of Pakistan, and federal laws are equally applicable, and there are specific exemptions being provided in respect of those in respect of chargeability of sales tax. Now, the other conditions or the other requirements of the Sales Tax Act may still be applicable. Now, in that case, one can understand that the sales tax, if somebody is providing taxable goods which are exempted for the time being, may still be required to seek registration with the tax authorities, with the Federal Board of Revenue. And in that context, it can be understood that the 3% would have to be applicable. That would have to be applicable in the sense that they haven't obtained the sales tax registration. However, again, I mean, it's never black and white. There's always a gray area when it comes to these questions. There can be an argument that if the person who is receiving these services is the ultimate consumer of the services, One can take the argument that being the ultimate consumer, he should not be able to require the registration to obtain the registration with the Federal Board of Revenue, and thus it should the further tax or the extra tax under Section 3 of the Sales Tax Act should not be applicable. So I understand your specific question, but I believe that it's not as black and white as it may appear to be. So I see Mohammed Bilal has asked this question: if input tax is more than the output tax, then is there any tax liability on taxpayer? So Bilal, one condition that come to my mind, and that even if they so there is one condition that you can only claim input tax adjustment up to 80% or 90% of the output. So let's say you have 100 your output of 100 rupees and your input is 110 rupees, right? So different jurisdictions have different limitations on this. So let's say the condition is 90%. So you can only claim your input tax up to the rupees 90. So there would still be 20 rupees input left unadjusted, which obviously will be carried forward to the next tax period or to the next month. So there would still be some sort of a payment obligation, if I understand it correctly. I see, Hassan, you have responded very diligently. Thank you. Thank you, man. You have made my life easier for today's session. Nadeem Anjum, you have asked a question. PRA registered person withheld the tax of unregistered person. I would request you if you can kindly clarify your question as to what exactly are you trying to ask. So one person has raised hand, Hafiz Ali Bilal. Hafiz Ali Bilal, let me know if you're available, and I can unmute you. I don't know how you can comment in the question box, and then I will unmute you if you're available. I think rather than waiting Hafiz Ali Bilal, I'm going to unmute you and you can ask your question and we will respond to that. Alright. Feroz, are you there?
Yes, Farhan.
Can you kindly unmute Hafiz Ali Bilal? I think he has raised a hand. and he probably would have a
Yes,
question.
I've unmuted him. He's on self mute. Hafiz Ali Bilal, you can unmute yourself and speak up.
All right, I think we can move on. So I can still see some questions popping up. So I hope Hassan Shabir, because we have short time, I would continue with the session, and hopefully Hassan will respond to your questions. And if there are questions left at the end, we will try to take as much as possible. Thank you. So last two topics for this tax competition, and of course for today's session, custom duty and federal excise duty. So custom duty is very, I think, very simple in the sense of how these taxes are computed. Because normally what happens is that these goods, these duties are imported, are applied at the time of import of goods, generally. But obviously, as you can see on your screen, they can also be applicable if goods brought in inbound from one custom station to another. What happens at the time of import is that sales tax is computed, and the collector of customs is empowered to collect that sales tax. Uh, you can recall from the last session that the collector of custom is also empowered to collect advance tax, subject to certain limitations and conditions. For instance, if somebody has this exemption certificate, then obviously the collector of customs would not require the importer to make payment of the advance tax. Similarly, when it comes to custom duty, at the time of clearance, at the import, at the port through which the goods are imported, the collector of customs there also make the collection, the computation of, or the calculation of the applicable custom duty, and accordingly the custom duty is paid at that stage. Again, there's no sort of specific requirement for filing return for the custom duty. It's just um, um, uh, paid at the import stage, and there's no subsequent requirement. Again, there are different rates that have been prescribed. There's a whole list of Pakistan custom tariff, different headings in the first schedule, and there are different rates depending on the headings, the nature of goods being imported, or the nature of persons who are importing goods. All these factors may come into play when computing the custom duty that may be chargeable. So schedule 5, I think, becomes very important because there are various exemptions, various reduced rates has been prescribed under the 5th schedule to the custom act 1969. So practically, generally, those are available on the FPR website, and you cannot probably find these updated laws or updated schedules easily. So either you can find them in the hard copy, or you can find them on the FPR website. So similarly, federal excise duty, again, this is applied under the Federal Excise Act 2005, and now it's being applied in very limited circumstances. Schedule 2 includes these excisable goods as well as excisable services. excise. These goods that are mentioned in the first schedule, not second schedule, first schedule. These first schedule goods are subject to excise duty at the rates that will be mentioned there, and similarly excisable services would be mentioned there. Now, just one quick recap. I think in the first mention, our senior partner Mohammed Avas had mentioned this, that some of the services that may fall in the provincial within the ambit of the federal legislation, which may be again subject to sales tax on services. They have tried to harmonize these two different laws, because otherwise, if the same services that are subject to sales tax on services and federal excise duty, that can mount to double taxation in respect of the same event or same services. Obviously, that would not be good for the business sector. In this regard, there is a legislation. There is a ongoing case I think currently pending in the Supreme Court. That's probably between Federal Board of Revenue and Sindh Revenue Board, where the Sindh High Court had taken this position, or had declared a judgment that the sales tax on services or the levy on services falls exclusively within the domain of the provincial legislature, and federal government or the federal legislature cannot levy any such duty on services. But obviously that's been challenged in the Supreme Court, and the outcome of that judgment would obviously have its own implications going forward, how the federal excise duty and sales tax on services would be reconciled. So that's it. Before concluding, I think a couple of things that you can see on your screen. There is a requirement for filing the monthly returns in respect of the federal excise duty, but normally this is filed along with the sales tax returns that are filed under the Sales Tax Act 1990, or somebody who is providing taxable services in Islamabad territory. So there's no separate return. It's one return under the Sales Tax Act, and in the same return, the Federal Board of Revenue have included this separate section for federal excise duty. Again, this as duties, federal excise duties also applied sometime in the VAT mode, value addition mode, whereby if somebody is providing excisable goods, and some excisable goods or services are being used in providing those excisable goods, then any input or input duty paid on those or on acquisition of those excisable goods or services can be claimed against the output of output tax. Just like Sales Tax Act 1990, there's also a concept of zero rating of duty. And again, if an export sector is providing excisable goods, but those excisable goods would be subject to zero rating, and that particular person has consumed excisable goods or excisable services in making those exports outside of Pakistan, then that person would be allowed to claim refund or drawback of those federal excise duty paid on consumption of those excisable goods and services. I think we can now, we are open for the last session of question answer. If you have any questions, feel free to ask. So somebody has asked why, if Suleiman Simab has asked why FED is levied on banking services and not the relevant sales tax and services laws. Um, I think you will find that there are certain I think in Sindh and in Punjab, probably there are some banking services which are subject to sales tax and services, and obviously they are also subject to federal excise duty. But there's a specific if you go through the first schedule and table 2, which deals with the excisable services. So there are certain services which have been sort of declared as not excisable services, subject to the condition that those services are taxable under the provincial legislation. So I think that some banking services are subject to FAD, and some services are subject to banking services are subject to sales tax on services under respective provincial legislation. Junaid Nasser, your question is very specific. That I have never practically dealt with such a question, but I would be glad to get back to you on this question. I see you have a very you are probably deeply involved in this. So, Mohammed Bilal, you have asked if a company importing raw material for further processing to make finished goods for sale, or company importing finished goods directly and sell these goods, then in this case, if any value added tax applied on it. I think in the first case, in the first scenario, there probably won't be any value added tax. But in the second scenario, there would be value added tax. I think you can refer to the 12th schedule for this. The 12th schedule very specifically have prescribed these conditions where the value added tax would be applicable in the case on import of certain goods. So Alina Sahar has asked, what is the difference between excise duties and tariffs? So these are different tax levies or tax concepts that have been applied by the tax authorities, and obviously have developed over a good period of time, not just in Pakistan but across jurisdictions. So one thing that you would see is the excise duty is sort of seen as uh, uh, is levied with the purpose of sort of discouraging the consumption of certain goods. Uh, Whereas tariffs are applied in the case of import of goods. Both have their own purpose, both have their own objectives in terms of excise duty will be used to reduce or to discourage the consumption. Increasing the excise duty will increase the price of that good, and that will sort of be a deterrence for the consumer to consume such a good. Whereas on import of goods, tax authorities use custom duties or tariffs as to protect their local industry or local sort of businesses. The more they have these tariffs on imports or the custom duty on import, the more they want to protect their local industry, the more they want to discourage the import of foreign goods. So that's why. So these are the differences between excise duties and tariffs. Tanzeel Ahmed is asking, is it our last session regarding Pakistan? This is not the last session on Pakistan taxation. We have still 3 sessions to come up. One on Wednesday, one on Friday, and I think one on the next Monday. So next session is going to be on compliance assessments and proceedings. Obviously, both for income tax as well as sales tax. And then the last 2 sessions, they are going to be more around international taxation, how the non-resident persons are taxed in Pakistan, as well as the tax planning or different sort of considerations for tax planning under the Pakistani law. So Shakil Ali has asked question. There are many goods which are used or consumed in provision of taxable services, while goods are taxed by federal and services are taxed by provinces. Thus, can a service provider claim adjust input tax against those goods? If yes, under which agreement? So generally, if somebody is providing taxable goods or is supplying taxable goods and has been paying federal output, then the Federal Board of Revenue generally allows the adjustment of input tax paid in terms of the taxable services, and the same goes vice versa, that the provincial tax authorities also allow the input tax adjustment. Though in this case, I, I think there are certain practical implications that tax authorities tend to be very vigilant and strict, because obviously this have their own tax implications. Regarding agreement, I think there's no agreement. It's as such, rather the law itself allows such input tax adjustment, because I've also included those parts in the slides, as well as included the relevant provisions of the provincial legislation as well as the federal legislation. And I think, for instance, if I have to point out quickly, you can refer to probably section 16C of Punjab Sales Tax on Services Act 2012, and probably section 8A or section 8B of Sales Tax Act 1990. You will find that this particular question that you have asked has already been covered under the legislation, and probably there's no separate agreement between the tax authorities. Tanzeel Ahmed, thank you very much for your kind comment, and it's really good to see these comments, and obviously encourages us to participate more in these sessions, and to knowledge and to become partner with ACCI in the future as well. I think that's it for today's session. Feroz, if you have any comments or you want to conclude the session.
Yes, thank you so much, Farhan, for your time and your efforts. I also want to thank Hassan, who has been silently replying to all the questions by our participants. Thank you so much, Hassan, for your contribution, and you did a very good job. And obviously, Farhan and Adil, thank you so much, guys. So we will be meeting up again virtually day after tomorrow for our next segment of the tax webinars. Until then, do look up on the recordings if you guys missed anything or if you want to recall something. I will be updating the recording links tomorrow because it takes some time to process the recordings by GoToWebinar. So until then, have a good day and bye bye.
Bye bye. Thank you, Rose. Thank you, everybody.
Thank you, Farhan.